Really think about that for a second. Growing your money in a big way, but without being glued to those flashing charts all day long, without that constant anxiety of trying to predict what's going to happen next. Sounds a little too good to be true, doesn't it? Well, I'm here to tell you it is absolutely possible. And the secret, well, it's not some complicated algorithm or a trick that only Wall Street insiders know. Nope. It's actually a super fundamental principle, something that just works quietly in the background. But don't let that fool you. It has the power to create incredible wealth over time. So here's what we're going to cover today. We'll start with the investor's secret weapon. Then we'll look at the snowball effect it creates. After that, we'll talk about your unfair advantage. And finally, we'll wrap it up with a long-term game plan you can actually use. All right, first up, Section 1. Let's pull back that curtain and really understand the engine that's going to power your growth. So here it is. The secret is compound interest. You've probably heard the term, but what does it really mean for stocks? Well, it's pretty simple. It means the returns you make on your investments. They start making their own returns. It's literally your gains growing on top of your gains. And that simple idea, it changes everything. Okay, let's break this down with some super simple numbers. Let's say you invest $1,000 and you get a 10% return. After year one, you've got $1,100. Easy, right? But here's where the magic kicks in. In year two, you're not just earning 10% on that original 1,000. No, you're earning it on the new total, the full $1,100. So that means you make $110 and now you have $1,210. I know, it seems kind of small at first, but trust me, this is the very beginning of a huge acceleration curve. And that little bit of acceleration, it brings us to the absolute perfect metaphor for all of this, the snowball effect. This is where we get to see how these tiny little gains can build into something, well, unstoppable. I love this quote because it just illustrates the feeling of it perfectly. When you first start, that snowball is tiny. It feels like you're doing all the work, pushing it, packing it, and it barely seems to grow. But then, as it keeps rolling down that hill, it starts picking up more and more snow. It gets bigger, it moves faster, all on its own. Your wealth, it works the exact same way. So you might be asking, okay, where does the snow come from in the stock market? Well, there are basically two main fuel sources. The first one is capital gains. That's just a fancy way of saying the price of your stocks goes up. The second one is dividends. That's when the companies you invest in literally share a piece of their profits directly with you. Now, here is a major pro tip. When you get those dividends, you've got a choice. You can take the cash and spend it, or you can reinvest it to buy even more stock. Think about it. Reinvesting is like grabbing a big handful of fresh snow and just packing it right onto your snowball. It makes the whole thing get bigger and roll faster. You've got to let your returns stay in the game. Okay, so now we know what compounding is and we've seen how it works. But there's one single factor that you absolutely need to unlock its real power. And I'm not just talking about an advantage here. This is your unfair advantage. So what is it? Look, it's not about being the smartest person in the room. It's not about getting lucky and picking that one stock that just goes to the moon. The single greatest, most powerful asset you have is just time. That's it. The more time you give your money to do its thing, the crazier that snowball effect becomes. And this example just lays it out perfectly. Check this out. You have Sarah, who invests for just 10 years, from when she's 20 to 30, and then she stops. Cold. Doesn't add another penny. Then you have Mike. He starts later, at age 30, but he invests for the next 30 years, way longer, and he puts in way more money overall. So who do you think ends up with more? It's Sarah. It's often Sarah. Why? Because her money had a 10-year head start to just sit there and compound. That, right there, is the unbelievable power of time. All right, so we get it, right? Compounding is this powerful force, and time is the key ingredient. But how do we actually do this? What's the plan? Let's lay out a super simple, super effective game plan. Okay, here we go. Your 3-step game plan. It's that simple. Number 1, invest consistently. Seriously, don't wait for the perfect moment because it doesn't exist. Just start now and keep adding to it regularly. Number 2, reinvest your returns. We already talked about this, but it's crucial. Keep that fuel in the engine. And number 3, and honestly, this might be the toughest one for most people, stay invested. You can't let all the scary headlines and market noise freak you out and make you jump in and out. And that brings us to maybe the most famous saying in all of investing. And it's famous for a reason, because it's true. Time in the market beats timing the market. Look, trying to perfectly guess the tops and bottoms, It's a fool's errand. It's a losing game. The real winner is the person who just stays put through all the ups and downs and lets time and compounding do all the heavy lifting for them. And that's why your number one job really is to just not interrupt the process. The biggest mistake people make is they lose patience. In the beginning, the growth feels painfully slow. You look at your account and think, wait, that's it? But that's completely normal. The real mind-blowing, explosive growth, that happens way down the line. You just have to be there to see it. Which leads us perfectly to the three big enemies of compounding. These are the things that will kill your progress. First, impatience. It makes you quit way too early. Second, fear. It convinces you to sell at the worst possible time when everything's down. And third, greed, or that desire to get rich quick. It makes you chase some crazy, risky bets that just blows up your whole plan. You let these three emotions take the wheel, and they will absolutely destroy the compounding process. Because you see, at its core, compounding isn't a get-rich-quick scheme. It's a process that rewards a very specific kind of person. It doesn't care about frantic trading or genius-level predictions. It rewards the people who are calm, the people who are consistent, and the people who are just incredibly patient. So, look, if you only take one single thing away from all of this, please let it be this. You do not need to be a perfect investor. You're going to make mistakes, you'll pick a bad stock here and there, but none of that really matters as much as just staying in a game long enough to let that compounding magic really kick in. So I'll just leave you with this final question to think about. Knowing everything we just talked about, what's one small, totally manageable step you can take today, like right now, to get your own snowball started at the top of that hill? I promise you, your future self is going to thank you for it.